Hi, everybody. My name is Preethy Padmanabhan, host of 10X Growth Strategies podcast. I'm also the CMO and EIR at Emergent Ventures. I'd love to have the panelists introduce themselves. They're going to talk about agentic AI killer use cases.
Well, hello, everyone. My name is Kayvan Baroumand, and I wear a couple of hats. One as the founder of SignalRank, and SignalRank is an AI-driven venture capital fund where we score every round of investment at every sector globally and every stage globally. And we actually score every fund at every sector and every stage globally. And we go in and Series B in the top 5% of those B rounds as identified by our platform. And so we're pretty active investors. We've made about 40 investments in a little over 2 years. And the algorithms work. You know, basically what it does is in venture capital, their business model is something, you know, they use what is called the power law of venture. How many of you are familiar with the power law of venture? Okay, a couple of you, great. Well, basically the power law of venture is the way venture capitalists invest, right? So let's say a fund makes 10 investments. They will identify 2 of those investments where they believe will return the majority of the money back to their fund. And that model is called the power law. So they double down on those companies and so forth. So what SignalRank does is we've been able to identify where the power law of venture is being applied to the portfolio companies of the top funds in the world. The second hat I wear is I'm actually launching just next block here, an incubator. We're calling it the thinktank.vc. So it's a co-working and a venture hub. So those of you who are looking to fundraise, looking for a place to call home, it's a brand new facility and we'd love to talk to you about that. And thank you for having me.
Thank you. Hi, everyone. I'm Patti Pan, and I'm the general partner from Solaris Venture Partners. So we are a private equity firm focused on later stage, and we invest in digital infrastructure, data center, energy, and also robotics. Yeah, so our approach is very different from an A fund because we think this years so we do a lot of details, and we want to provide a lot of values to the companies we invest into as well, help them to grow. So that's what we do very differently, like I would say. So like any others in Silicon Valley, we all wear a lot of hats. So at the same time, I'm also a founder, and I do have a gallery business. I sell contemporary art. I work with a lot of visual artists, something. So I think because of that, so I see a lot of similarities between the founders and also the founders and artists. So that's also kind of embedded in my theory about how to pick the best founders in the room. Yeah, very happy to be here and to discuss the agentic AI with other brilliant people here.
Hey everyone, I'm Aditya. I'm at Kleiner Perkins. Kleiner Perkins has been around since 1972. Was one of the first investors, actually the first investor in Google, Amazon, Genentech, all the companies that made up the first era of the internet. And then more recently, our team has been behind, companies like Figma, Glean, Rippling, the list goes on. I particularly focus on early stage enterprise software across apps, infrastructure, and cyber. And today I'm involved with companies like Glean, Together AI, Traversal, Profound, and a few others in stealth. We invest, across the board from Series A's all the way to growth rounds, and we take lead positions in board seats. Obviously investing pretty heavily behind the AI trend, and I'm pretty proud of what the team has been able to do so far against them. I'm excited to be here.
Thank you. We'll start with you, Aditya. So, agentic AI, what industries are you seeing the most killer use cases from your vantage point?
Yeah, I think if you take a step back, what's been happening is you had these Copilot applications emerge, and the role of these Copilot applications was to really supercharge knowledge workers in the enterprise. But if you think about it, those Copilot applications were more like, next generation SaaS companies. They were still augmenting a person, but they weren't really doing the work, so to speak. But now it's gotten exciting with reasoning models where you have a new cohort of agentic applications that are flooding the market. And I'd say some examples of use cases that I've been particularly excited about are one in software engineering. So for example, some of the work that companies like Cognition are doing, for example, they focused on refactoring code bases, but now they're starting to take on more and more tasks in the enterprise as it pertains to software engineering. I invested in a company called Traversal that I'm particularly excited about. And what they're doing is they have a multi-agent system that root causes issues in production infrastructure. So think of it as an intelligent observability system. There are companies that are out there that are trying to automate the work of financial analysts. So they'll go in and build an agent for spreadsheets. They'll go in and build an agent that goes and scours the web and returns interesting research. And there are companies that are out there now trying to disrupt UiPath by going and automating processes that are mundane and repetitive in the enterprise. Very excited about what's possible. I would say it's still early in terms of real proof points about how these agents work, but the tech is finally there to do something big.
Fantastic. I heard a lot on software tech. I know, Patti, you invest in energy, you invest in robotics. Tell us a little bit from your perspective.
Yeah, so it's actually still, I would say like AI adoption, especially in data center, is still very early, but we are very excited to see how it is going to be in the future. Because if you guys have ever been to the data center or energy, people joke about it's one of the most boring businesses, but it's very fundamental. And, that's something we really need, like at the age of AI. But think about the whole operation. It's very old-fashioned, early stage, and but you don't want data center. You don't want those deficits, right? You want the power to be there all the time. So there are a lot of actually opportunities there, and I would say I haven't seen very very exciting really the tech in use at this moment, but we do see a lot of tech companies early stage startups actually begin to tackle in that specific area. So we are also very interested to learn, if any founders here, we are very excited to if you guys, dealing with that issue in the data center energy sector, we are very interested to learn about that. Yeah.
Great. Kayvan, would you add to that?
Well, I think, when you look at what's happening today, obviously we're in a AI revolution. I use the word revolution maybe because I'm part Iranian, I don't know. But there are and we've had two revolutions in the past 20 years. I think the first one, and I think we're going to go into this, but was around cloud computing, right? And what cloud computing disrupted was basically, how you build your company, right? And then you had the mobile revolution, right, with mobile apps, right? And that disrupted where you build a company. And what's kind of different about this revolution is you're disrupting who does the work, right? And that's where people get a little scared, right? And I always say this, never forget that these agents are here to serve you. So just make sure you're on the right side of the fence, right? And so that's kind of the way I look at it. But to answer your question, I think any agent where you could build a moat to protect things so what are those moats? If you could get within an enterprise, right, and basically disrupt and make those processes better. If you're into life sciences, right, and you can take that massive amount of data to make a cure for cancer, right? And things like that, or use AI to identify minerals for energy around the world, right? Like Earth.ai, one of our investments. So the thing that you need to kind of see how you separate yourself from the noise, because there's a ton of noise out there. I hope that answers the question.
Yeah, it does. In fact, sometimes when I hear this whole aspect of taking jobs and other things, I still remember when computers came. I was a young adult in India, and I saw that all the computers in my mom's branch was getting, revolutionized out there, and all the cashiers were afraid of losing jobs. But we know now, in hindsight, that literally it changed the face of the country and many countries around the world by making better jobs and more higher paying. So I certainly think there's a huge value and opportunity with AI. Yeah. Fantastic. So actually, I'd love to hear from Patti on with agentic AI, is it an extension of existing markets or is it opening up new categories for value creation?
Yeah, this is a really good question. And I think for me, I think it's an extension of the current AI market. The reason is, I think it's still for me, especially for agent AI, and of course it has a lot of potentials in different user cases. And because we are PE firm, we actually work with a lot of big corporation as well. One thing I heard from all those big companies, and also I talked with IBM, I talked with Google's and Microsoft. They told me actually one of their biggest revenue growth these days is they do the enterprise level like agent AI, and which is very, very interesting. And I think that's why for me it's just because the tech like AI developed so quickly in the past few years. I think it's just a natural path. But I also will have this kind of opinion. I don't know in the future if can be developed even more, because we also invest in robotics. And one thing in the robotics we're talking about these days is agent robotics, because AI today still we are using like on our computer. It's not in the physical world, but we are doing much more things in our physical world. And think about it, there are also much more data in the physical world. And every day like you pick up a cup coffee, and just when you wake up, like everything, like still a lot of things we can teach AI how to do it. So for us, because we look into the robotics, so we're thinking maybe in the future there may be a way for the agent AI combined with the robotics. We know a lot of companies already invest a lot in that sector, and it's very exciting. Yeah, I think that's my opinion about this.
Yeah, fantastic. And Aditya, you were talking about software and technology. Tell us your perspective on any new category creation.
Yeah, I mean, look, I would say first of all, it's very early days, but there are certainly new categories being created. So coming back to that example I gave you about that company Traversal, they're building agents to root cause issues in production infrastructure. If you look at how that happens today, you have obviously companies like Datadog that are huge, but what Datadog does is it gives you the pipes to the data and gives you dashboards, but it doesn't actually do the work. And so what this company is trying to do is actually do the work of go in and investigate, find the root cause, and then suggest remediation. And obviously, if they play their cards right, they can do the remediation itself. And this was just not possible before. And if it actually works, then you are over time reducing the need for a company, for example, to hire SREs. So by definition, that is a new category. And I'd say, even if you extend this, I'll give you another example in marketing. So we're now starting to see companies that are automating the work of agencies. So they're going to businesses and saying, hey, we will deploy our agents that are powered by reinforcement learning, and those agents will go and allocate your ad spend optimally across Google, Facebook, etc. Just not possible before. All of this is just going to increase the amount of spend on these products. And I would say, the fullness of time, the theory is true. You are replacing services, and that's a much bigger market. And so by definition, these are all new categories.
Yeah, fantastic. And how many entrepreneurs in this audience? Show of hands. Okay, so maybe about 40-50%. And any investors? Okay, that's nice. So talking about entrepreneurs, we're going to shift gears to due diligence and investment thesis. So I'll start with you, Kayvan. Well, we need to separate hype from reality, right? Especially with agentic AI. Literally, I heard there are 7,000 companies, right? Or maybe more, probably more, right? So how do you separate hype from reality when you're evaluating these pitches?
So, good question. Well, there's a couple ways, by the way. We also use AI to do our due diligence. This is true. The things that we used to do manually, we can now give AI the criteria for scoring and evaluating companies. The other thing that we do, actually, sometimes you have to think outside of the box, right? So for us at SignalRank, our fund, the way we do diligence is we actually leverage the due diligences of this gentleman. No, and what I mean by that is we leverage the due diligence of the Kleiner Perkinses of the world and the Sequoia Capitals of the world and the Andreessen Horowitzes of the world. And that's how we actually, one of our biggest criteria for, making an investment decision. And by the way, these guys are good, right? So, and that's why we're 100% data driven, because our AI basically knows how they invest, and we know which companies are excited about. So we're basically piggybacking off their hard work and, hopefully benefiting from it. Now, to answer your question about due diligence, I've been in this world, I've been in the startup ecosystem for a long time. I was a founding CEO of Plug and Play. And, I remember when mobile apps came and when, cloud computing started and so forth, and specifically with mobile apps, it's really easy to build an app, right? Today it's really easy. I mean, we have someone who'll build an agent for you right here. So what's important today for you founders is there's an expectation that you have to be an all-around founder. You have to be good in your building your product. You have to be good in sales. You have to be good in building your team. You have to, so all those things, there's an expectation for you because there's so much noise. And the only way that you can separate yourself is by traction and results. So that is what's happening. So don't sugarcoat, be real honest with yourself, and build your team correctly. And, today the due diligence is going back to the basics and so forth. And I can tell you one thing, because we score everything, the 25th percentile, the 50th percentile, the 75th percentile of companies around, the margins are very close. But when you get into those unicorn type of companies, there's a huge data gap. And those are the ones that the Kleiner Perkins of the world are interested in. And so the data shows that. So hopefully that answers a long-winded way of answering your question, I hope.
Now that sounds great. I think maybe Aditya will start charging you commission.
It's okay.
Yeah. And I've also heard this from some of the top VC funds. Like sometimes when they see unicorns, they have to have like a polarity. Like some people should really want to do it. Some people will say no. And that's sort of a way by which they sense if it's really a moonshot idea. So some things I've heard in past panels. Patti, would love to hear your thoughts, right? What are some criteria you use to select, and what are some red flags that you look out for?
Yeah, sure. So I think Kayvan said very, very good, criteria and due diligence, and good job, guys. You guys are early stage. I don't know how you guys do it because we invest in later stage and we're a private equity firm. So it's, I would say due diligence is a little bit easier. We have more data points. And so that's why data pattern also are very, very important for us. And of course, we want to see the revenue. We want to see whether you have good revenue pipeline and what's the ARR, all those numbers in the past and your forecast as well. And also the people who you are hanging out with. So I would say for us, because we joke about ourselves in private equity, we take the slow bullet, which means sometimes our due diligence is very, very long, and we're very, very cautious because it's just a very different business mode. And so I think some red flag, and as Preethy asked about, is we do see in some later stage companies, right, the number is not that authentic. We do see sometimes it happens. And so that's why just the sugar, as Kayvan just said, don't sugarcoat it yet. And also make sure you understand what's your key advantages is. Sometimes we understand the whole business, the key, advantage, competency here is probably is go-to-market. It's not the tech. Sometimes it's the tech, and you need help with the go-to-market. So I would say we're interview with not only the founders from the team who do the due diligence. We want to meet the whole team, and the COOs and CFOs, everyone. Like, because usually the company we work together with, they already have like big team already. And we want to see like how everyone is getting along with everyone, and whether this is the right group, whether they're smart people, they understand what they're the strongest advantage here, and what is the part they need help with, right? Because we bring capital, of course we want to bring resources to the smart people. So I would say that's kind of the our how we run our due diligence.
Great, thank you. So Aditya, you shared that, some of the companies you've invested in, the first check-in, and those companies have very high staying power, like Genentech and, many of those companies that have become multi-billion-dollar companies. And now also you've invested in Glean and all those companies that are rocket ships. What are some metrics and signals you look for early on, right? Because all these agentic AI looks like flashy demos. How do you differentiate to find those companies with a lot of staying power?
Yeah, so I think the first thing is a lot of VCs fixate on ARR, and I think I would argue a lot of founders also like, hey, if I get to 1 million ARR, does that mean I'm a Series A company? And that's actually immaterial to us. What we look for is depth of engagement with the product. So I'll give you a case study with Figma, which just went public. We did the Series B there, and they were at roughly 400K of ARR when we did that Series B, and I think we did it at like a 120 million valuation. So at the time it was considered high. The reason we made that investment was because we cut some of the engagement data and found super deep engagement with the product. And obviously there are certain things you can look at to verify, but typically, the point I'm trying to get across is, even with a small N, if there is really deep engagement, that is a great sign to invest. So that's one.
Well, I know we are running out of time and we have to get to the next one. Any lightning, final words of advice? Kayvan.
Final words of advice.
One line.
One line? Okay. I would say that today, well, first of all, AI is here to stay. Okay. So, but for those of you who have committed to this journey, just understand that things are going to take a little longer, and you have to be patient, and you have to be prepared. There's, in the 20 years that I've been supporting startups, I think this is one of those times where, you have to be prepared with all the fundamentals of starting a business, and be prepared. Have a year's runway from the moment you decide to start. Because as they mentioned, the top funds, there are a lot of seed funds, but you have to find the right funds, right, to support your journey, and that's going to take time.
So as I mentioned a lot today already, so I would say for the founders, think out of the box and then learn the best people from another industry, not from your industry. That's actually how you can gain the absolute advantage over your competitors. Learn the people who is running the best in other industry and learn their tricks and apply to yours. Yeah.
For mine, I think it goes back to what I mentioned earlier, which is spend a lot of time on problem selection, like an undue amount of time on problem selection. Think of that as, upfront CapEx, because if you select the right problem, then you can really go big. I think most founders, unfortunately, will go after problems that they faced and not think about whether that's actually a problem that's broadly applicable. They'll build a solution looking for a problem. There's a lot of alpha actually in just thinking about the problem statement itself.
Fantastic. Let's give a big round of applause. Thank you.